Good morning, everybody. Good morning. Very early this morning. Very, very early. It is now 5 a.m. I was forced to wake up early because at 4 a.m., Vladimir Putin was speaking. And this is that website I've told you about, financialjuice.com. You don't need to pay for anything. Come in here as long as you're on a computer, not a cell phone. Tick strike right over here. Click on that speaker. You can listen to the markets moving. No need to sit there and look at a 1 minute chart so that you can continue to do what you need to do during the course of the day rather than watching the screens. Anyway, Vladimir Putin speaking at 4 a.m. Eastern Time while you all are asleep, and he vows to continue the Ukraine military operation. He then comes out and mentions that Kiev held talks with the West about weapons supplies before the military operation. Blah, 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 blah. Then he goes on to say at 4:48, 10 minutes ago, we will be able to export 55 to 60 million tons of grain, and we expect cooperation to enhance with India, Iran, and Pakistan. That's it. That's it. Markets were worried. This is looking at the week to date chart. Markets were worried, and we came down here at 405. I think it was on the 1 minute chart, right there to print that low at 408 as we were hovering right here at this 40-50 area. And you can see the bounce that we've had already. And where you are looking on the ES is right down to that February low, which was the day of the FOMC on the very first day of the month, right down there at 40.37. We came down there and we visited it, and here we are again back to that damn support right at 40.66. So what I had already done was to throw into the early morning traders over there in the spreads, two risk trades to go and take. One of them is risky. One of them is this other trade is one of the crazy loco trades, which we haven't had in a very long time. And that is looking for this to close green today. Mention that, go over it again. Buy the 4070 puts, sell the 4075 puts. They are getting 360 this morning. Here's the other risk: 4040, 4035, 4035, 4030, 4020, 4025, the one that I threw out there at 430. Looking at $1.25. And the reason why is, again, we closed, not closed, we'll go over the close part in a minute. We dipped greater than 1% intraday Thursday and Friday. Tracking back on how this trend has worked, we have gotten 2 days in a row where we have dipped greater than 1%. And usually the very next session is the one that breaks higher than 1% from the previous day's close. 40.79 being the close on Friday. So 1% is right around 41.20. Very, very crazy, crazy to take, but easy to go in there if you have a day trade that you can go in there and scalp it. Because again, we are looking at gaps on the VIX that need to be filled, both from the weekend and overnight here. And I want to bring you to this here. Having closed red 2 days in a row, it's not a fantastic streak to be looking for 3 consecutive red days in a row. We have had it, but it's not a great subject to go through. But we have here had 4 gap downs in a row, and opening below 40.79 would be a 5th gap down. Now here you can see 1, 2, 3, 4 back in February. We've been gapping down a lot during the course of February, but I went back and tracked and going back to see when was the last time that we gapped down this many consecutive days in a row. And that comes off of the August high. On the August highs placed at 43.25, we gapped down 1, 2, 3, 4, 5, 6, 7, 8. 8 days in a row, even though 3 of those days were only 30 points. I bring you back to what I shared over the weekend and shared in that email yesterday about how the SPX and the NDX have turned bearish on that strength indicator at the bottom of those charts, thus also suggesting we are getting a much lower move to the downside. I made a mistake in my calculation when I was looking here, and I appreciate that, Matt. 158 is the range. I was using the low of the day on Friday, forgetting that we had the low of the month over on February 1st. 41.95, 40.37, it's only 158 points. We're still subject or suspectful that we are going to have a 300-point month. 41.95 minus 300 points brings you down there to that 38.95 area, and all we're looking for is that 39.50. So again, NASDAQ did not come down to that February low on this Vladimir Putin bullshit. So today is not the day that you want to be buying puts. It's not the day. It's a risky day to be trading the call side on the 0 DTE or scalping something that you don't want to hold overnight, meaning you will buy it today and you will sell it today. And we'll have a better idea on that as we come into the earnings that are going to be coming out this morning, which are the big ones. We've got Walmart. Walmart, as I showed with you, having the ability to share that, you've got this big 154 area up here at the top. So we're going to be watching that very closely. Home Depot also reports, and I mistakenly forgot about big old Home Depot. Home Depot, you can see here, this is definitely not as good as Walmart. As you're trending down here back on the February, very much like the SPX, having dropped a considerable amount from that 422 down to 264, but you're not in a fantastic area over here. So Home Depot, another one that we will watch. If we can get a spike up at 340, 345, I would look at it as being a very good subject to go and do some credit spreads on, to sell some calls at 350 for later in the week, as it's pretty clear where that 350 area is. So again, not much going on. Vladimir Putin was a complete nothing. So here we go, off into Tuesday. Message me during the chat room, anything you want, any trades you want to look over. But I have a very good feeling that those of you that are awake early, that are over there on Interactive Brokers, are going to be banking some money very easily over here with these risk trades over here on the SPX. 40-20, 40-25, 40-35, 40-30, 40-40, 40-35. And that crazy loco trade, I tell you, it doesn't look so crazy. So I'll see you guys in the chat room. Have a great morning.